Good morning. It is Friday, April 5th, 2024. I am Mark Sebastian, your only option. I'm joined by Leisha J. Leslie, the Queen of the Candles. This is Option Pit Live, and it is non farm payroll day. And Leisha, the numbers blew the doors off. The non-farm March non-farm payrolls, 303,000 versus 214,000 expected. Uh,
Wow.
yeah. The unemployment rate was 3.8. Wages, month over month, up 0.3. Expected 0.3. Wages year over year, up 4.1%. Expected 4.1%. On that news, they have initially done some selling.
Yes.
Prior to the announcement, futures were up about, call it 20,
17, I
now
saw.
about 10. We actually saw a push down to down on the day. A lot of confusion here. Lots of selling. I'm interested to see. I think the revised numbers from previous non-farm payrolls maybe are going to have an effect here. But that initial top line number is why we sold off. It's pretty impressive. What's your reaction to that number? 303,000 versus 214. That is a hot number.
Miss. That's a hot miss, right?
Well, it depends on what you're thinking, right? It's a
Well,
miss.
isn't it, in my opinion, and always in the past, the market always reacted to how different it was from the estimate,
Yeah.
right? It wasn't like if they had estimated properly, I honestly think the market doesn't react as much.
Right. I agree. I think the issue that you've got is, and this is when you know that things are screwy and the market is somewhere over its skis. When
Oh, I
good
thought you
news
meant
is
screwy
bad.
numbers.
Yeah. When good news is
Right.
bad, that means the market is not in a great place. And that is what we're looking at, because this number it should be considered really good, but the market reacts to it like it's bad because we don't care about people working. We care about the rates getting cut, right?
Exactly.
That's
Which is so
what we want
sad.
as traders. We want rates cut.
It's horrible.
Right. Well, it just shows you that the market isn't the economy. The market is the market, and what people want is rates to go down so stocks can keep going up. They don't actually want the economy to be good.
Wouldn't it be nice if we could just take that power away from, one guy with one sentence yesterday? I mean, you can't tell me the guy didn't know what he was going to cause.
Neil. Yeah. No, he knew exactly
It's
what he was
incredible.
saying.
If we could just get away from the Fed.
Good luck.
I just want to
love to get
say
away from
F the Fed.
I'd love to get away from the Fed, but I just don't see that happening. The market
We're
is
now up
too
16.
rate reliant. And I think it shows you a little bit that this is a little bit more of a house of cards than people realize. When, like I said, when we react to good news in a bad way, that tells you that the market is maybe not built on fundamentals and is built on something else. A little bit of hopium. As I'm talking, we've recovered a little bit. We're now back to up 17, but there is a lot of up and down action here. And I think it's gonna be an interesting opening hour. Some additional news hitting. Unemployment rate 3.8%, expected 3.8. What is it? The overall employment rate 62.6% versus an expected 62.7. So all in all, it's a good number, but the market doesn't want a good number.
So may I show you this SPX right here?
Yeah,
This is a key level, up 20. 51.67 on SPU is back to, look at this nice support level that we closed below yesterday. Very ugly, very large bearish candle. But look how many times we've tested that and held it. We close below it. A lot of times when we go beyond, trade beyond a support resistance level, the market comes back and retests it. And that's exactly where we're going to be, up 20 bucks, 51.67. Watch that area on SPX. It could be coming back to retest that and then just roll right over. True, but odds are we're going to test that up 20 and we're going to roll over.
Yeah, I mean, yesterday was definitely an outlier day. That, Alicia, I was looking, that was the biggest candle. We had a gap that I think was as big in November, and a pretty ugly gap in February, a couple of gaps in February that were huge. But in terms of just a single candle, that is the biggest candle I think we've seen in over a year yesterday.
It really is.
And we closed below the 21-day moving average for the first time since January 17th. There was the VIX implied volatility, highest level of the year. We had been seeing this cycling of implied volatility where, we were having higher lows and higher highs with every kind of wave in the market, right? Folks, the market moves in waves, right? It just doesn't go straight up and then straight down. It goes up some, then down a touch, then up some, then down a touch, then up some and down a touch. And since December, when the market was, SPY was 470, the pattern, that's really where this pattern began. So we ran up $50 in SPY. And the entire time, every time we got a little bit of a selling wave, implied volatility had a higher low than the previous time, and we'd also had higher highs. And so I think that this might be the kind of breakout. I think things smell, folks. I think this might be that.
Go ahead. Sorry.
No, I'm done. Yeah, no, I think this might be the breakout that the market has been kind of gearing up for.
Here's that corresponding giant, very bullish green candle in VIX yesterday. And as you say, it just was creeping higher lows, higher highs.
Yeah, it's not great. All right, so we just updating on futures prices. We are continuing to shuffle about. We're now down a touch from where we were, but back to up about 16. Alicia, let's go through some charting with you. You've already charted out SPX and kind of laid out what you see there. Next on our list is Bitcoin, which has been extremely hot until the last few days.
Till it's not.
Exactly.
Yeah, Bitcoin looked like it was ready to try to get off the mat here, holding my support level. And I have this upward trend line going back to February, but it's now testing again testing the support level. Yesterday looked like it was ready to take off. I do have pretty good resistance here at 68,007. So it needs a breakout above there to retest 71,000. So yeah, Bitcoin could be bear flagging right here. Hard to say. Need to watch that support level. Crude has, as we know, had a nice rally. I think it has a bit more to go before it hits a little bit of resistance, but it could continue. It could continue. It has quite a bit more to run, I would say, possibly to 93. Not today, but in the long run. Bonds still bonds have been in a downtrend, right?
They're getting
They're
smoked today
they're
on this
holding the
news.
support. Yeah.
So they probably, if you look at the 30 years down over 1% right now. That to me, by the way, folks saying, are we going to be up or down from here? 30-year down 1% from where we're currently trading from yesterday's close.
Sure.
That tells me we're probably gonna see some red.
Yeah. Trade below 91 on TLT. We definitely have room to 87.5.
Wow. Well,
so yeah, and look at the downtrend.
TLT's down over $1 pre-market.
Yeah. So very close to testing that low. Like I say, you see a trade below 91, and I think it could trade quite a bit lower.
Yeah, and then lastly, the shiny stuff.
Should we wait for Andrew on that?
On a tear. I know we're going to talk about it a little bit more, but I just want your initial chart analysis before we dive in.
Sure. I have us up against some resistance here, but this is just a pause. This is a pause, possibly bull flagging. It's up against resistance, so a lot of times it'll stop, gear up to take that next leg higher. Gold has plenty of room to run. Plenty. 23 is in the cards. We're very close. We've almost traded it. And then up from there, 24.20. And honestly, in the future, 25 half.
Yeah, and what was interesting is that we've seen this rally in gold, oil, silver, and normally you would expect the dollar to be getting absolutely obliterated.
Yes,
that's not happening.
They've disconnected, haven't they? And look today, the dollar kind of made a double top, pulled back, held my support here though, and now we're railing again today. It's disconnected. It's at the moment. The commodities and the dollar, yeah.
So
all
I don't know what
inflation, correct? Isn't that all inflation?
Yeah, I mean, I think that, generally with inflation, isn't the dollar should be softening a little bit, you would think, but not right now. It's all, I think there's money maybe quietly coming out of the market and getting into the dollar because, like I said, I think things feel a little teetering-ish relative to where they've been. Real brief update on futures. We're now up 20. We're now up 0.5%, even though bonds are still getting shellacked, which is really interesting. Really interesting, the reaction. I'm looking to. Wanted to see what the revised numbers were.
Yeah.
What was there a big downward revision from last month? We've seen that happen a lot.
Yes.
Big headline number followed by a downward revision, but
quietly.
Yeah.
Quietly revised.
Yep.
It'll be interesting. And we open up here, like I say, it's up against my that support resistance level. It'll be interesting what we do.
Yeah.
Maybe an opportunity to go short. To me, the only way we're going to combat this very bearish, very red, very large candle is if someone else more powerful, like Powell, takes the opposite side of what Kashkari said yesterday.
Yes.
I don't know. Right. There could be other things too, right? It could be, I guess Biden put the screws to Netanyahu and then the Ukraine NATO thing and we're in a huge rally. Maybe it's just time to pull back.
I mean, I think that, at 3 months without touching a 21-day moving average is relatively rare. right? That's a pretty aggressive move. So at a minimum, just a little bit of a pullback would be healthy. I don't think anybody thinks that
would.
the market's going to 3,000 tomorrow. But a pullback back toward, 50, back to the 50-day moving average would make total sense here.
Yeah. Well, 51's obviously going to be a support level, right? Nice rounded number.
Mm-hmm.
And then below there will be like 50.38. I have 50.39.
Yes. All right. Well, Leisha, have we've hit all the charts you wanted to pounce on?
Yeah, unless you want to, we can bring on Andrew.
Yeah, let's bring on some additional fresh perspective. Let's bring on our most powerful, powerless person, Andrew T. Giovinazzi. Andrew, thank you for generating your way here. I know that there's been some storms in Maine and you've been without power, but thankfully there's a time to buy stock in Generac, and maybe it's right now.
Yeah, no kidding. It's actually not a terrible idea, but can you hear the whiz of the generator going right now?
No, no.
Oh, that's
we
good.
Do not.
Good.
So
this mic
Andrew,
works.
What was your reaction to the move yesterday? Because I was looking for a pullback. In 0TT, I'd set up a little bearish butterfly. And it was funny. Leisha and I were talking back and forth because she and I run 0TT. I was like, hey, look at me. I'm already out. And then I was like, and then I watched the market sell off. And within 3 minutes from me being like, oh, look, I'm already out of half, I was like, and the rest of this fly is going to be worthless.
Well, I see. That's why you take profits, though, right?
That is why you take profits.
Hey, you're here to take profits. You're not here to wish things into existence. So
right.
That was good trade management, taking what you did. Yeah. I don't think the morning looks super strong. Closed a couple of trades in some of our products, which was good, like getting out of some long deltas, long delta trades. And then everything kind of stopped moving up. And then all of a sudden we went kind of from up 0.75% to even in about a half hour, right? And then you're like, okay, whatever. And then Fed person speaking, and like, do you really think so here's one thing. They don't need to cut rates at all this year.
No.
But probably politically they will. But the inflation numbers have not been good, meaning I think there's still some latent inflation around because the government's spending too much money. Again, that's just my opinion.
So, Andrew, they're not political.
I don't think that's an opinion.
I think that's also.
I think there is latent inflation,
and they got to stop spending. Also, job growth is coming from the government hiring people because so those things are good. Well, I'm not going to say they're good, but so there's, if we're not going into a recession, stocks generally go up. So I think most of the move yesterday was kind of the bad geopolitical stuff. Again, my opinion, the algos, like the market prices can price this inflation thing, right? Okay, where there's some growth, there's no recession, we gyrate. When you throw like that, Blinken saying Ukraine is going to be part of NATO, like, the algos take that now and just blast away.
Yeah.
Like, we can't price the Russians getting pissed again. Everybody remember 2022, the first 3-4 months of the year, VIX was 30, right? Do you remember that? Like, what are the Russians going to do? If we reintroduce that because the Secretary of State says some stupid crap on a news conference, all of a sudden, I think that the vol perspective blows up. Like all of, because right now we're trading in a 10 realized vol market, 8 realized vol market. Besides yesterday, even yesterday's move on the close, we were down 1.25%. We haven't been able to close -2% at all this year once.
Yeah.
So, the fact that we sold off a little bit, like you guys said earlier, I don't think we've been going straight up. So eventually, stocks come down. But I think that extra end of the day kick was adding this geopolitical bent, right? So I think what will be interesting today is if we actually, I think as far as the news goes, stocks should probably bounce. Stocks should probably bounce today, would be my guess. What you really want to see is how much they bring VIX off, right? Because we have CPI number next week, Mark, and you and I have been, basically gobbling up strangles into these numbers and watching them just blow sky high for 4 months. And we have another number on Wednesday. So
right now, VIX futures are only down about 10 cents off of this news.
So I think
the bond market is getting thwacked.
Yeah, which I mean, it should be, because the whole interest rate thing is fantasy. Like at this point, the government can't spend $3 trillion.
It is fantasy.
There's total fantasy.
There is no way they're cutting rates in June, folks. Get it together. Actually, Andrew, we don't know something funny.
It's a hopium pipe, baby.
I'm checking Twitter to see if there's these non-farm updates, and I switched back to go see if they'd revised the numbers. And the first thing on my feed is a story about Generac having its price target raised.
I'm buying some stock just because I'm probably going to buy a bigger generator. Oh, actually, I'm going nuts. I think because when we do a little addition, I'm going to put solar panels and like a Tesla battery pack in there.
Oh, really?
Well, it's just, what? I live in trees, man.
Do you get that much sun?
Oh, yeah. Actually, Maine is very sunny. You would be surprised. It's cold, but sunny. But I'm going to walk around my property with a camera today. I've got like roots that are sticking 8 feet high out of the ground. It's like,
oh, wow.
It's crazy. Yeah.
Speaking of crazy, let's talk chips. Okay. Because what seemed to be the unstoppable force, the juggernaut of this market, what's really been driving the market, in October, SMH was $143. Even with yesterday's sell-off, SMH is $220. But since March, we've had a couple of big candles, and that one has not been able to break into new highs, even as the market was approaching some of that. Our AI obviously driving everything. Are we in for a pause?
Ooh,
AI
that's
pause.
My question. What?
AI pause?
Are we in for a pause? Yeah. Are we in for an AI pause? To put it the way it should probably be spoken in English, or American English at least. What are your thoughts, Andrew?
I mean, ultimately, I think the chip thing is a infinite juggernaut, basically. Now, the problem is the market has already priced it for currently as an infinite juggernaut.
Yeah,
like price wise. I mean, we've had Mark, Qualcomm, MU, all these stocks we've done. Those have been good stocks for us. Like writing IBM up, all that kind of stuff. So those have all been good for us. But like right now, okay, well, you're pricing some pretty crazy stuff. Now, that doesn't mean it can't happen, but it's at some point, and all these things, because, I lived through the dot-com boom. I lived through a couple of booms in my advanced age. And they do pull back from time to time, but, 20 years later, Amazon is worth a fortune, Google's worth a fortune, Microsoft's worth a fortune, and they all were at pretty high prices in the dot-com boom. But, those prices for, the top 8 or 9 stocks did come to fruition.
They did. You have to pick your winners, right? You can't just pick crap, right? If you pick up pets.com and toys.com and
Webvan,
Lycos.com. Although Lycos got bought by somebody. Excite. You pick up those and you're a loser. You have to pick a winner. So, you don't just blanket buy IBM and NVIDIA and SMCI and some of these other names. You have to pick your winners. Now, I would argue that one of the issues with like an NVIDIA at this point, I don't think NVIDIA is going down, but you've got to question how much of future growth is already priced in with it now being the third most valuable stock in the world.
Right.
But there is, looking at where that multiple, if you can go through and pick some other winners that maybe haven't priced in the next 10 years of growth or the next 5 years of growth, that is where there's money to be made.
I mean,
in a
NVIDIA
name
can
like,
still go back to
which is how we
700
found
bucks and
Qualcomm.
bounce to 1,000, right?
Yeah. I mean, our very first show, folks, if you go back to our very first show, we told you go long Qualcomm. And it is up $60 since we told you that. It's been an impressive run.
That's been a good one.
Yes.
I'm not gonna lie.
All right. So now finally, I know we heard Leash and I already talked a little bit about volatility. Pretty big breakout, but I want to hear everyone's perspective here. I thought the big harbinger of maybe there's a little follow through here was the move in VIX and the move in overall S&P implied volatility. That was outsized relative to the sell-off. So vol went up more than the market went down by a lot. And we'd already been, it's kind of cycling higher. What are your guys' reactions to kind of the VIX, the vol breakout, and what do you think and the partial backwardation of the curve? Right? Like VIX is now trading at the April future is trading at a discount to the cash index, and the May future is trading on top of it. What are your guys' reactions to kind of the move in the vol complex?
You want to go first, Leisha, or you're
Andrew, you're the expert.
I would say like the curve flattened, Mark, but stayed in kind of a relative contango. So it's still looking like it's basically in the vol traders are saying, I don't know what's going on. Like, I'd say up or down 2 points because you got the CPI number coming on Wednesday. So you've got the action and then you have a 3-day wait. So volatility is basically going to price the 3-day wait and flatten the curve because all the short-term vols are going to go up. So basically, look, what's happening is folks think we're going to have a move still. I think the CPI number could, again, produce another 100-point move in SPY. Who knows which way? And they're going to leave all those short-term vols higher, which flattens the curve, which is what we have now. But I think by Wednesday after the number, Wednesday, Thursday, VIX will not be anywhere near this number. Everybody will either be freaking out because inflation is back, because now we're running on this news, or they're like, oh, inflation's just whatever. It's okay. We're going to pretend the narrative is still existing that we have a June cut, and VIX drops back to 13.5 again.
I would just add that I don't think it's going down anytime soon. Like you say, at least through next week. And I think we could get a pullback here. So I'm thinking VIX is going to trade higher in the next few days.
I agree. Which leads us kind of to our stock of the week. Now in this one, Andrew is going to be taking the bull case. I'm going to be taking the bear case. Leisha is our judge, jury, and executioner.
Dude, you got the hard case today.
I know. And so the stock that Andrew and I are going to be debating, and he's going to make the bull case, is gold, GLD. Or you can use gold futures if you want. I don't really care, Andrew. The shiny stuff, the stuff that people have been loving since prehistory. Why should I go long gold now?
For all the reasons we've just discussed, that The inflation thing is a figment of everybody's imagination. It's still here. It's not going away. And I guess that's the basic thing. People are piling in now because they are looking for alternatives, real alternatives to equities. I don't think gold is like a hedge for equities. I think it's just a different asset class. It does tend to trade a little bit with equities, but right now it does appear some money is leaving. Some money is piling in, and when gold is an all-time high, like, you got to take the signal. There's a reason. So I think, it's the market is starting to price this sort of government spending thing. They're not liking what they're seeing, and they're getting into gold. So I just think it is a market psychology thing while people are climbing in. So that's why I think it definitely goes higher, though.
I think the rally here has been just a little bit of replacement with people's with our gold, with our Bitcoin bugs taking some profits here ahead of the halving, and not wanting to be long the market. So where they put their money, they put it into gold. As soon as this halving happens, I think I'd rather be long. Gold doesn't really have any use. I'd rather and currently it's priced higher than platinum, even though platinum actually has more use. I'd go long platinum. I'd go long silver. I'd go long Bitcoin. I think and I know this is always morbid when I say it, if I was looking for inflation protection, the only asset I truly believe is a good inflation hedge is bullets, because those are bullets. Bullets are I wish there was a bullet index. There isn't, but in the last 15 years, bullets are up 10x. What's another asset class that's up 10x besides Bitcoin?
Wow. Microsoft.
Yeah. Microsoft's had a good run, but yeah, 15 years ago, a box of 22s was about $3. Now it's what? Almost 30. There you have it, folks. Leisha, there's my arguments. What's your take, Judge Jerry Executioner?
I find it interesting that people are classified as a gold bug, or people, make fun, and that's ridiculous. Gold you're not going to trade, a bar of gold for anything, right? What good is gold going to do you if at the end of the world
ends, right?
Yeah. But it's interesting, though, that it is reacting like this, and there are believers, right?
Mm-hmm.
I would say, so we have right here what we call a harami on this nice bullish candle, which could be signaling a change in the trend after we've had this very bullish uptrend. Nice rally. So yesterday's high will have some resistance. Actually, it's a little bit higher this morning. 213.55 is your resistance. But if it wants to make it to the top of my pitchfork, which it looks like it wants to, I'd say we're going to 217.5.
There you have it.
And support comes in down here, 208.45. But yeah, it's looking bullish still. Nice bullish on the weekly.
Speaking of looking bullish, we had a big vote in Disney yesterday, and you wanted to take a quick look at Disney in terms of a trade idea.
Yes, I think Disney has further to trade lower. I like puts in Disney. I think Disney's going to trade down here 114 and possibly even 110.
Wow.
I think Disney has room to go lower.
Do you know what the fastest ride is at Disney World?
Fastest ride?
No, which one?
The Bat. I was there so long ago. It was like the Batman or something. It was insane.
Well, that's Six Flags.
Oh,
that's Great America.
I was in Disney World in Florida, dude. Maybe it wasn't. I don't know. It was a long time ago. It was a crazy ride.
It's not Big Thunder Mountain. It's not Space Mountain. The fastest ride at Disney World is the monorail.
No, it isn't.
The monorail goes like 50 miles an hour.
Oh.
Disney, So, which sounds fast, but you know what's faster than Disney's monorail? More reliable and a more comfortable ride.
Mark, the
I-
king of the Segway, Sebastian, right
I
there.
was just gonna say, I gotta give it to
King
you,
of the
Mark. That's
Segway,
pretty good.
Sebastian.
It's that's right. It's Andrew's trading vehicle.
Way to go.
That's
Thank
excellent.
you.
All right. So, Ruben, you can put up the first chart now of Newmont. Okay. So today's trading vehicle, we are going to compare a vertical call spread and a long stock with a collar. So the idea is, why would you want to do one or the other? So, besides being a trader, I'm also somebody who buys stock. And so, you make some money trading, you take your money trading, and then you go buy stock with it. Stock pays dividends, blah, 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 on and on. Okay. That's the kind of your investing thesis. So, but inside a trading account or an investment account, where you're like, okay, I still, let's say a 401k, let's say, I want to own stock and collect dividends, but you can trade options around the stock in your 401k. At least I do. So it presents different opportunities. So right now, this is a Newmont Mining. It pays a dividend, and you can see from the chart, stocks going up. And also on the bottom chart, you see volatility is relatively high. That means if you're buying calls right now, you're pretty much paying top dollar for the calls. So, which I don't really like to do. I would rather write the calls than basically buy them. And the reason is this. We'll go to the next slide. Right now, if you look at this as Newmont, if I go out to May, the dividends in June, you can buy a 35 put for 78 cents in there at a 37 volatility. But you could sell a 42.5 call for 39 for a 39 vol. So the vol skew is a little inverted, and in gold it does that, but this is a gold miner. And so there is all that upside. Like, folks are buying calls. So from a trade point of view, what I'd rather do is I'd rather buy the put against my stock. Again, that hedges the risk or stops me at a price. And then go write the call. And heck, if I get out in May and I get taken out and at 42.5, that's 10% gain or whatever, I'll take it. If the stock pulls back, I unwind the collar, meaning I'll close the put, sell out the put, buy back the call, and then reset, buy a new put and farther out and do it again. And then trying to collect the dividends and then trade the collar around. Now, the difference is what is a collar? So what I'm going to do here is, if you show my screen now, Ruben, I'm going to draw this is a very sophisticated drawing of, so here, if this is our break-even line here, and I'm going to draw a call spread, right? So you buy your call spread here, the stock goes up, and then boom, right? So this is a standard vertical call spread. If the stock doesn't go anywhere, you lose. This is the bad area here. And if you gain, you're here and you're stopped out at the level. Again, I sell a call if I don't think the underlying is going to go a certain distance. So I figured 10% for Newmont would be enough. Basically right outside the straddle value where I'll place that short call. Now, this is a standard call spread, just buying a vertical call spread. So you would buy the call near the money, sell the call out of the money, and you're getting a little more money for that short call that you sell, which means your call spread is going to decay less fast than normal. So what you have is you basically can beat long the call near the money, sell the call out of the money, and have a very low decaying trade, which also insulates you somewhat when the market pulls back because you have sold that upside call. So you don't have that direct burn on the long call. So that's the reason for a vertical call spread in the first place. Now, if I trade, let's see here. You know what? I'm just going to do a new one here. Don't save, right? I'm going to do a new one. So here we're going to set up now. What does a stock and a collar look like? So if I do this here, here is my P&L line. Okay. So if I buy stock, it just looks like this, bing, straight up. Now, if I buy a put, let's say at this strike, I'm going to cap the bottom off. And if I can do this erase thing here, it's going to erase this part, right? So the put stops me here. And then if I sell the call on the upside, right, I'm going to cap my upside gain. So this is the call strike and this is the put strike. And I'm going to cap all this gain by selling the call. So when you're looking at comparing the two, when you buy a call, when you trade a collar, long put, short stock, long put, short call against long stock, that is just a long vertical call spread synthetically. This is called synthetic equivalence. It's something we teach at Option Pit and OP Mentoring Pro and all our programs. So the idea is both trades are the same, the way they're going to pay. However, how you close the trade is slightly different because stock pulls back, you close your collar, reset your collar at a different time, and then you're still trading your stock, collecting the dividend. The vertical call spread, you're kind of hosed. If the stock goes down, you could buy the short call back, see if you get a little pop, but the timing on your short vertical on your vertical call spread is going to work differently. Like you really got it has to pay. So the from an investing thesis point of view, the collar around a stock might make more sense for you. Might make more sense, and it's a trade that I put out yesterday for my students in OP Mentoring. I put the same thing on. I bought the stock into the kind of the sell-off yesterday, bought a put, and I'm going to write the call today into the rally. Hopefully it rallies, but I'll sell it anyway. So I have a long stock position in Newmont put on yesterday, bought the 35 call, looking to sell the 42.5 put. And I will manage it basically just as I described. If I don't have to do anything and I'm just taken out and I get the money, that's fine with me. In May, it's perfectly acceptable. I'll just write puts in it and to try to get the stock back and see if I can collect the dividend. Again, just standard buy stuff, watch it go up, investment thesis. But that's my trading vehicle today, comparing a vertical call spread with a collar against stock.
What a great vehicle. All right, we've got about 1 minute left on the show. As I speak, futures have now really sold off. We're not on the lows from that initial candle, but we're trading below overnight's volume weighted average price. VIX futures are now up 10 cents. Bonds continue to get face punched with the 10-year down about, down over 0.5%. So S&P futures are 52.05. So we're holding 5,200 here. What do you guys think is going to happen for the day? Starting with Andrew.
I think today will be mixed, but slightly up, but not a lot. Because I think the market is waiting for a CPI number that Kashkari guy just screwed everybody up a little bit. So I think if anything will be maybe slightly green. I think VIX will stay bid though through the day and will hold a bid at least until the CPI number comes out.
Leisha, what do you got?
I'm going back to revisiting that support resistance level for up 20. Really watch that level. That's 51.67 on SPX. If we fail there, buy some puts.
Ooh, I like it. That'll make me ready today.
Yeah.
I think we're going to end up down potentially as much or worse than yesterday.
Oh,
this
that's
number was hot.
Hard. That's as bearish as you get right there.
Yeah, I think I hope I'm wrong. I hope I'm wrong, but if I'm right and we are down big again today, it sets up the bad Thursday, worse Friday, We come in Monday. We're at near all-time highs. Everybody's scared. They have a weekend to think about it. And we are, next thing you know, we're trading at the 200-day moving average. I don't think we're due for like a big, long bear market. But I think we could have a little violent correction here over the next few days leading into CPI. I think people are going to freak out. The rate cut's not happening in June. And I know it's a bold prediction, but I'm willing to put a leg out. I think that today could be a tough one for the longs. All right. So
it was the Harry Potter ride.
Oh, the Harry Potter ride. Okay.
I had to
Yeah.
ask Ann.
Harry Potter and Batman, exactly. They're the same thing.
Well, it was nuts. Elizabeth Green had gotten sick. It was
Oh, wow.
crazy. Anyway, it was Harry Potter. Insane ride.
All right, folks, why don't you let us know what you think, where you think the market is going to end today? If you've got questions, please feel free to let us know. You can comment or email us questions, support@optionpit.com. And we'll be happy to address them. But we are up against it. That is all the time we have for Option Pit Live. So for Andrew T. Giovanazzi, the Viking of volatility, and Leisha J. Leslie, the Duchess of Doge, the Queen of Candles, I am Mark Sebastian, your only option. This was Option Pit Live. Have a great Friday and a great weekend, everybody.
Take care, everybody. Bye.
All opinions expressed by Trader Hub contributors are solely the contributors' opinions and do not reflect the opinions of Trader nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Trader nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Trader Inc. is the parent company of Trader Brokerage Inc. Trader Brokerage Inc. and Trader Inc. are separate entities with their own products and services. Securities products and services are offered through Trader Brokerage Inc. Trader Brokerage Inc. is an independent subsidiary of Trader Inc. All rights reserved. Member FINRA SIPC.